Hey everyone, welcome back to Corporate Decoder. Today we're diving into Arlo Technology's latest annual report. Get ready for some twists because this isn't just about cameras and security, it's also about some serious number crunching. Arlo, if you don't know, makes smart security devices like cameras and doorbells. They're trying to sell you peace of mind, but let's see what the fine print says about their own financial security. The company paints a picture of growth, transforming home security through cloud services, artificial intelligence, and easy-to-use devices. They talk about subscription services like Arlo Secure, Total Security, and Safe, which offer everything from AI-powered alerts to emergency response features. Arlo sees opportunities beyond your home. They are looking at small businesses, government, and even direct home monitoring. They are trying to position themselves in a broader Internet of Things market, which includes cars and smart cities. Arlo wants to be more than just cameras. Its Arlo Secure subscription aims to be your personal emergency button. It's like having a digital bodyguard that can dispatch fire, police, or medical responders with one tap. It has object detection, cloud video recording, and even smoke alarm detection. Not only that, for people who want the works, there's Arlo Total Security with 24/7 professional monitoring. Think ADT, but Arlo style. It uses a multi-sensor that knows about motion, opening doors, water leaks, freezing temperatures, and even smoke alarms. The company faces some big hitters like Amazon's Ring and Google's Nest, ADT, and companies such as TP-Link and UFI. But Arlo believes it can compete through its technology and Arlo brand. Arlo outsources its manufacturing. So while the company is based in North America, its products are primarily designed in North America and manufactured in Asia. They use manufacturers in Vietnam, Thailand, and Indonesia, and have quality control teams there to keep an eye on things. Now the important part, the note about forward-looking statements. This is where Arlo admits that anything they're saying about the future might not actually happen. It lists a whole bunch of risk factors that could throw their plans off course. Demand for products might drop, new products might flop, and some key personnel might leave. Component shortages and reliance on a limited number of manufacturers are significant threats to Arlo's business. The report discusses that the manufacturers are in the Asia-Pacific region, specifically Vietnam, and any labor issues or unrest in the region could cause production delays. Losing key employees is a big risk. Competition for tech talent is fierce in Silicon Valley, and Arlo might not be able to hold on to its best people. Arlo admits its financial results are unpredictable. A lot of things could cause its stock price to tank, and as a result, the company is exposed to foreign currency rates that could harm Arlo's revenue. The company's sales channels are also subject to change and wholesale distributor relationships, a bad product with a health epidemic, or discovering security flaws in the products. Amazon is a competitor and distribution channel. If Amazon decides to stop selling Arlo products or providing cloud storage, the sales and product performance could be harmed. The company relies on a limited number of retailers and wholesale distributors for sales, so a significant consolidation in sales channels could cause their revenue to decline. The company has an agreement with Verisure, which gives Verisure exclusive marketing and distribution rights in Europe. It can sell products through their direct channel globally. But Arlo can't guarantee this relationship will continue to be successful. They're dependent on their information technology systems, and if those systems or data are compromised, they could see consequences like regulatory investigations, lawsuits, and a damaged reputation. The costs associated with guarding their systems will require significant expenses. They take steps to address any vulnerabilities of their technology, but if they take long to fix them, they will be exposed to security breaches. And they want to sell you more subscriptions. Their future depends on getting you to sign up and keep paying. If customers don't see the value, then Arlo's revenue is going down. The average selling price of Arlo's products typically decrease rapidly over the sales cycle of the product, which may negatively affect revenue and gross margin. To sell their products, Arlo has to manage the cost of older products and introduce new products. Arlo's been hit with patent lawsuits before, and they could be again. And there's always the chance of a securities class action lawsuit, especially with the stock price being as volatile as it is. That said, Arlo's board can issue blank check preferred stock, which could stop an acquisition. We can see they are trying to show that they aren't just about the bottom line, as there are some ESG initiatives. They talk about environmental sustainability, ethical sourcing, and caring for their workforce. They appear to care a lot about diversity and inclusion, and they are proud of their team. Okay, let's get into the numbers. As of December 31, Arlo had $151.5 million in cash and short-term investments. They also have a credit line with HSBC Bank, giving them extra borrowing power. Unfortunately, the company isn't profitable. For the past year, the net loss was $30.5 million, but service revenue is up 20.8%. This means people are buying those security subscriptions that have the potential to boost profit. One big customer, Verisure, accounted for 43.2% of Arlo's revenue. And going forward, Verisure won't have a minimum purchase obligations, which may cause their revenue to drop. On a positive note, in September 2024, Arlo's board approved a plan to buy back $50 million of its own stock. It's a way to try to boost the stock price, of which $4.4 million was utilized as of December 31, 2024. So what do we make of all this? Arlo's trying to walk a tightrope between growth and profitability. The company is innovative as they develop new products and services. They need to expand to global markets, continue to form other channel and partnerships, and retain their subscription customers. Arlo is making strides in environmental, social, and governance practices, but there is always room for improvement, and the board knows this. They are consistently reviewing and looking at ways to improve to establish an organized framework for identifying, evaluating, and remediating issues as they arise. Arlo's success isn't guaranteed. There are always risks such as data breaches and economic instability which can impact demand for their products and services, any of which could materially affect Arlo's revenue. Ultimately, I'm cautiously optimistic. The shift to recurring revenue through subscriptions is a positive sign, but Arlo needs to manage costs and navigate a fiercely competitive landscape. Thanks for watching. If you enjoyed this deep dive, don't forget to like, subscribe, and hit that notification bell for more corporate decoder goodness. Let me know in the comments which company I should decode next.